Hello, everyone. I hope that you have your tea or coffee, if you prefer, ready. And we're going to be talking about what is sort of this one of the most important pieces of your business plan. So, this is typically the piece that is read second. When I was adjudicating business plans, this I would read the executive summary, and then I would read the financial plan when I was, looking at whether or not I gave out financing or recommended that we gave out financing for businesses. So this is really where you need to have a very solid, right, financial projections. And if you have been in business, you need to have some, right, past history and the financial statements in there as well. But this is also where you are, just like in the implementation, you talked a little about when you were purchasing things and stuff like that. But this is where you really need to lay out what the money that you're looking for, if the purpose of your plan is to get financing, what that money is going towards, right? So you can't simply say, I'm looking for X number of dollars without telling anyone what that money is for, right? How much the, equipment's going to be, if that's what you're looking for, how much the working capital is, right? And what it's going to be spent on. So that's very, very key. The other thing is that you really do have to have your projections, because how is this money, if that's what your plan is, or if it's for internal purposes only, right? What is it going to look like going forward, which is your projections, right? So you need to have at least 2 years of projections in there. It is really nice to see sort of a monthly, right? So month by month by month. But annually is all right as well. But listen, when I looked at it, I really like to see some of that, month to month, usually as sort of a backup to the annual. And in those projections, you really need to dig down and let people know what your assumptions are, right? How much you're selling of your different products and services, how much those products and services are going to cost you, right? What are all of your, administrative costs that are going to go into that? And then you do need to actually include, right, the balance sheet, the income statement, and the cash flow, because all of those pieces do work together within your financials. And if somebody is looking to, invest in your company by lending you some money, and even for yourself as the business owner, it is really good to know what the cash flow is going to be, right? Are there going to be months where your cash flow is going to be negative? As much as nobody wants that, sometimes it does happen, particularly when it comes to manufacturing, right? Where you might have to outlay money before you actually get money in, right? Because of the cost of goods sold. So this has to be really solid. And, at the end of the day, you want to show that you're making money. But the one thing you cannot do in this is have unrealistic projections. That means both on your revenue as well as your expense side, right? So, I have seen a few businesses that wanted to, start up and were looking for some startup financing. And they were saying that they were going to have $1 million of revenue within the first year. This is typically not going to happen for most businesses. Not to say it's impossible, because certainly businesses have done it. But depending on what your business is, if you're sitting there and saying you're going to have $1 million of revenue, then that's typically a bit of a red flag, right? Because your sales are going to usually increase as you go, especially for a startup. And so you have to be a little bit careful and have to be realistic. You need to have realistic projections for your revenue, but you also have realistic projections for your expenses, right? And the same thing is, if you just see the cost being level for certain things from year to year, that can be a red flag as well, because typically things like insurance do go up unless there's a reason for it. Like, say, you're coming to a renewal date, right? Like, or you've had it for so many years, and now because you've been so many years, right, incident free and claim free, now you get a bit of a discount. But you actually have to tell people in your projections why the stuff is, why things are changing and what your assumptions are. So again, your financial plan and projections, I would say, with your executive summary, is like, those are the two most important pieces of your plan, particularly when you are looking for financing, right? They're still important if it's internal, but it's more of then a bit of a gauge to see if you're meeting what you thought you would meet, both from a revenue and an expense side. But these are critical, right? Financial plan and projections are critical when you are going for financing. If they don't make sense, then there is a very good chance that your financing will not go any further until you either go to another place, right, who maybe is okay with what they are, or you adjust them to be more realistic. So if you do have any questions or comments, please put them down. I welcome any questions and comments that you have. And this is sort of the final piece of the elements of your business plan video segments. So, I look forward to any questions and comments, like I said, and we will, be in touch with our next video segments. So as always, I welcome your questions and comments. Please drop them below. This does conclude all of the little pieces of the elements of your business plan video series. So please check out my YouTube channel and my Facebook for additional videos that I've done on different pieces of both accounting topics as well as business planning.